Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the Chief Portfolio Manager of Fundstrat family of ETFs, GRNY, GRNI, SMID, and GRNI Income. This is our update for the week of January 5th. First, let me start with some particulars. As of January 2nd, the price of GRNY was $24.99, NAV of $24.98, and total assets of $3.926 billion. For GRNJ, Fundstrat's US Small and Mid Cap ETF, the price was 26.41, NAV of 26.38, and total assets of 202 million. And for GRNI, Fundstrat's Income Large Cap Granny Fund, the price was $20.39, NAV of $20.35, and total assets of 38 million. I wanted to recap the performance over the past week. Over the past week, GRNY um, fell 1.13%, which was also a week for the S&P 500, which fell 1%, or roughly 13 basis points of underperformance. GRNJ rose 0.23% in the past week compared to a 0.68% decline of the Russell 2500, or relative return of 88 basis points. And for GRNI, uh, price return was minus 0.72 compared to 1% decline for the S&P, or roughly 13 basis points of outperformance. And to recap 2025, GRNY gained 24% compared to a 17.8% gain for the S&P, or roughly 614 basis points of outperformance. For GRNJ, since the launch on November 17th, gained 5.66% compared to a 5.97% return for the Russell 2500, or 31 basis points of underperformance. And for GRNI, the S&P, total return was 1.8% compared to 2.76%, or roughly 95 basis points of underperformance. Now, every month we want to give you an idea of flows into the ETFs. December was a weak month for stocks, which meant it was a slow month for inflows. 288 million flowed into GRNY, 159 million into GRNY, 114 million into GRNJ, and 15 million into GRNI. Okay, well, let's think about macro because it's the start of 2026, and I want to go over the rule of the first 5 days. Now, if you're not familiar with the rule of the first 5 days, it's the idea that stocks and how they perform in the first full week often directionally tells you what the full year looks like. I think it makes intuitive sense. It's basically saying if stocks are strong at the start of the year, it's because there's a lot of demand, therefore it should be a good year. If stocks do poorly in the first week, well, I mean, it could be the start of a bear market. Now, I think a lot of folks are saying, how can 5 days determine the full year? They think it's a crazy idea, but let me just show you the stats prove this out. Since 1950, well, first of all, since 1950, there's 76 years, and the average return of the S&P is 12% a year. But look at the contrast. If the market is up the first 5 days, and that's happened 49 times, the average full year return is 16%. If the market is down in the first 5 days, the full year return is 3%. And look at the win ratio, 84% versus 56. So you can see the math kind of proves this out. But here's what's interesting. We've had 3 back-to-back years of the markets gaining more than 15%. In fact, that's only 5 times that you've had that 3 years in a row since 1950. So let's look at the full year returns in that case. Well, of the 4 instances when the market was up the first 5 days, the total return was 20%. The other 3 instances, the market was down and the average return is minus 10. That's a huge differential in performance. And look at the win rate, 100% versus 33%. So again, I don't think it's so crazy. Um, So what does that mean? Well, the S&P closed at 68.45 on December 31, and so far it's been up for the first two trading days of the year. But the key is closing above 68.45 on January 8th. So that's the key level by Thursday. And just to remind you, on our general composite for the year, we think stocks kind of are so much strong out of the gate. They'll decline in the middle of the year as much as a 20% decline before rallying and recovering at the end of the year and getting to 7,700. And this is coming at a time when the earnings picture actually still remains pretty good. We're forecasting earnings growth of 15% in 2026. That's an uptick from 12% last year. And finally, let's go over Granny stock individual stock performance. The top 5 performers in GRNY and GRNI were AMD, Lam Research, Caterpillar, GE Vernova, and Vistra, which, by the way, basically semis and AI. Among the bottom 5 names, you can see it's really software stocks and partly Tesla here. As for the mid cap side, the top 5 performers are Bloom, Rocket Lab, Reddit, Chemico, and Galaxy Digital, and the bottom 5 are Qualys, UiPath, Samsara, MongoDB, and Pegasus Systems. So again, AI infrastructure leading, software declining. And as far as themes go, looking at mid cap, energy and cybersecurity was the top performing theme. Millennials number 2, global labor shortage AI number 3. That's it for now. Thanks for listening, and I'll speak to you soon.